Welcome to Markets Now. I'm Michelle Rourke with Mark Schultz, Northstar Commodity. A mixed close in both grain and livestock futures trade today. Let's pick this apart though. First, corn, new contract lows. We closed both September and December now under the $4 level mark. So how concerning is that to you? How much more downside do you think we see before we find support?
Well, it's one thing to go down. It's another thing to go down with some vengeance, even at these lower levels. When you saw the corn market dip below and to post new lows today, which was 403 on the December contract, we actually accelerated a little bit more and went down another 5 to 6, 7 cents. Managed to come back to about a penny and a half lower, then sold it off again at the into the close. So to me, the market is still on the negative side. I think another lower close again tomorrow probably opens the door. September corn, maybe 350, 365, and I could see the December corn down to the 375, 380 level before we find the next level of support. And they'll go about every 10 cents after that. So we're getting down to some pretty low levels. And the bottom line is, quite frankly, we're still missing on the demand side. Hopefully we pick something up. We are at least getting to a point that we are some of the cheapest corn in the world. We'll see if that business starts to come to the fruition.
I was going to ask you, how low does corn have to go before you start seeing consistent demand?
Yeah, I was asked that question yesterday, and my comment was, I think you can see some demand here at this level. I just don't think you can see consistent demand or consistently good numbers on the demand side. I think at 350, 360, you probably have a better chance of getting more of the business. And I know this might sound weird, but quite frankly, that might not be the worst thing to do, is to take the market lower and maybe prevent some of this, either get the buying interest to come back to the U.S. and or get other countries to slow down on their production of corn in the future.
But we need big demand, because the market right now is basically trading what, a record yield?
It's going to, yeah, we're going to trade a record yield at 181. And really, it doesn't make that much of a difference if it goes down to 179 or 178. You're still going to be a 2.2 billion, 2.1 billion bushel corn carryout. So something else that's not enough to move the needle to the upside of any significance yet. So if you're going to change the dynamics, you're going to have to get something more catastrophic or something else happen in the global situation. That may have an influence, but at this time, you're probably still suggesting that a market has more downside than it does upside.
So soybeans made new lows before popping back a little bit higher into the close on Wednesday. Was that end of month short covering, you think?
It may have been a little bit. You've got a big run up today on the stock markets, and then again on the energy complex. Eventually, China's going to have to step in and buy some beans from the U.S. They've been very slow to do so. In fact, our new crop bean sales on the books off to the worst start in 13 to 14 years. So there's no help out of that. You might get some business 1 or 2 days, but if you're going to change the dynamics, you're going to have the Chinese come in and do some 30, 40, 50, 60 million bushel purchases of beans, which they used to do. I think they still have to get something done. But overall picture is you had a bigger crop overall of beans in all of South America this year than last year. And unless there's a weather problem again this coming year, they're going to have even more again next year. So it gets pretty tough, in which our window of opportunity to sell beans gets pretty narrow in here.
And funds have been pretty relentless sellers in all of the grains, but in the case of the soybeans, with August weather looking as good as it is, do they just keep selling? Are they going to push us into new lows?
Well, it feels like that's they're going to do what works, and what works is sell any type of a rally they get, and that's the way they're playing the game here, and that's been the trend. Corn, beans, and wheat. I'm not saying you can't get a bounce back on up, but something else has got to change far more significant than this. If we do close back below this 1018, 1015 on November beans, next downside target is 980, 985.
Yeah, the funds really haven't had any reason not to sell from a weather perspective, right?
Yeah, this is probably rallies up this summer are some of the narrowest rallies we've ever seen in this market. So I think the biggest move to the upside on corn since the 1st of May is 30 cents. I mean, that's just unbelievable. The beans are much better, maybe 60, and that both of them happened last week when we had the threat that we were going to have a hot, dry week this week, which turned out to be absolutely dead wrong, and we gone into cooler, wetter conditions.
Hmm. So the wheat market, after trying to bounce today, did manage to end mixed. And we had a lot of reasons to rally, including the dollar being down, French wheat was rallying. We just can't rally. Is it just because our supply is perceived to be really big there as well, or bigger than last year anyways?
Well, I think we're bigger than last year, and I think the spring wheat harvest will be upon us here, not only in the U.S. but also in Canada. And so, unless there's some surprise there, and when you look at the spring wheat tour last week, they were suggesting we're going to have some big wheat crop. So my guess is we're going to be inundated with a tremendous amount of wheat. Yes, we are the cheapest wheat in the world. We're competitive now in the world market. It's amazing. You have to go down into the low to mid $5 a bushel in order to get competitive. You're seeing some European wheat prices up pretty good today. So maybe we'll start seeing our export demand, quite frankly, hasn't been terrible. It's actually picked up a little bit here. We just need a lot more than what we're getting. You need some of these. I don't even know the last time we've ever had 30 million bushels of wheat sold in a week. You're going to have a lot of that stuff start to take place.
Do you think wheat is trying to forge a low, or can we not even expect to do that until we get spring wheat harvest out of the way?
I think you could try to be forging some type of a low in here on wheat, but I'm not really holding my breath on that one either. I think until you start seeing something change where the pattern goes, because right now it's been very clear in the last 15 to 20, 30 days. You give me any rally that bounces up 15, 20 cents, and the funds are pounding to the short side again on these markets. So I think you're going to have a tough time until you break that pattern.
And the livestock, let's talk about cattle first. Feeders got a little help from contract lows in the corn market, but live cattle futures back lower today. Do you think that market looks tired technically, or was that just kind of this back and forth until cash develops?
I think back and forth until cash develops. The cash has really been amazing of how well it's been able to hold up at this time of the year. You typically get into the dog days of summer, you have the market and the demand pull back. You had prices go up at significant levels. We had a correction fund, or the packer is in negative territory, $55, $65 per head for every animal he's killing right now. So you've got some issues potential there. You got cattle weight staying at the high end. Obviously, you got some heat down into the southwest area where the bulk of the cattle are. Might slow the weights gains down slightly, but if we are nowhere near as hot as we were last year down here in the Texas, Oklahoma area compared to what we had last year. So I think that you're holding some of the heifers back, rebuilding the herd. That's taking place. That's helping out for right now as well. But the cash, like I say, it's been staying resilient, 195, 198 in the north, and that's been well over a month in here. And I'm going to tell you, they're bidding 195, 198 all the way through the most of them. You can get them all the way through the month of August. So cash looks like it's not going to break, and that's keeping the futures somewhat in check.
Yeah, and the futures are at a big discount, so that certainly helps the cause. What about the hog market? We were up today. We've rebounded off of the recent contract lows. Is it been the push in cash and cutouts that have helped us, or has this been a technical move?
It's here too. I think the cash and the cutouts, the cash has firmed up some. I wouldn't call it a stellar performance of the cash, 85, 86 bucks. But we were 81 about 2 weeks ago. So we've come up some on the cash market. The cutout has moved to new highs for the year. So that's the impressive part on that market. So I think when you look at the futures, to me, they just got way oversold. You had a rally up, you had a correction, came into a nice little correction of a 38, 40% retracement. And now we've started to turn the market back on up. So If we can stay here, and I'm trying to be cautiously optimistic with the pigs, and only because I think maybe the cattle market stays pretty lofty, and maybe we can keep this export demand, which has been okay and actually in a way pretty good. I'm seeing global pork prices firming up, especially China and over into South America, which probably tells me they're selling pork to China. Probably suggests they're going to expand because of cheap grain. But the old saying used to be is cheap grain usually results in cheap meat longer term down the road.
Okay. Thanks for your analysis. As always, Mark Schultz, Northstar Commodity. That is Markets Now.